How does the German tax system work? Today we're going to talk about this and where are the basic entrance levels for your taxation in Germany. So, welcome back to another video here on G-Tax. My name is Roland Elias, I'm an international German tax advisor. And today we're going to talk about the progressive tax system in Germany. First of all, you have to understand, if you came from abroad, it's like we don't have a flat line. You know, for example, there's always 20% on everything, or we have a step-up system where it's like 5, 10, 20, 25%. No, our tax system in Germany is progressive. That means with every euro you make, the more you make, it rises in the percentage of the part you have to give. The entry level is 0%. Until up to 12,000 euros, roundabout, and then it rises from 14% to 45% with the so-called solidarity surcharge. But the progressive system has some specialties. So is one specialty that there are some marginal rates which are percentile for every euro you get up. Then it's a whole income-based calculation. That means all of your income means your, for example, you have income from rental, you have capital gains, you have your employee, your pay slip, and all of this is 1 year from 1st January to last of December. It all gets mixed up, deducted with all the deductions, and then the net that keeps, for example, the taxable income is the one you have to tax. So it's an annual assessment you have to do, and it's a very individual taxation, which is always a little bit problematic. First of all, there is a basic allowance. It's 12,096 euros in 2025, and it's a little bit more in 2026. This is for all residents. That means for everyone who has an income in Germany, he can file this basic allowance. This ultimately is automatically considered in the tax calculation, and there's no application or something else needed. First of all, we have the tax zones. The tax zones are the entry zones where you have the 0 for 14%, it's around about 12,000 euro, and then the progressive zone, which gets up. And then we have the top rate zone with 42%, and then we have the rich tax zone. This is 45%. So it gets up from 40% to 42%, and at 42, round about 280,000 euros, it makes a jump up to 45%. This is normally no flat jumps, it's just progressive rising. Indeed, the rich tax is a jump. It's all on your taxable income, it's your gross, is taxable. That means you have no taxes deducted. It's all like the gross, and then you have your deductions, and then this will be the taxable income. Not the net income, that's another thing. It's the gross deducted, and then you have, for example, insurance, you have, for example, driving to work, and all of these specialties, and this is very big thing. First of all, it's very important that you don't ignore any deductions. Use all of them and pay all of them into your assessment for your employment status, and then you can save a lot of taxes. Here, big thing is all income tax at top rates. That's not wrong. The next thing is you have to differentiate between the social security and the tax. The social security is a fixed thing with round about 40%, parted up between employer and employee. And then the other thing is the income tax, Lohnsteuer it's called for employees. But at the end, you have to pay taxes on your taxable income. So this is the first entry in the German tax system.